All right. Hey, Tyler. Welcome back to our Monday mortgage update, everyone. Tyler and I are here to share the news about what's going on with mortgages. And the most recent news is about what's going on with CPI and how that impacts mortgage rates. So, hey, Tyler, how's it going?
I'm doing good. How you doing, Tiana?
Good. So last week we heard the news. Inflation is still 4.7%. We're up
Uh,
zero point 0.2 from the previous month. So the economy clearly is still moving along. People are still spending money, even though the feds are trying to slow it down. What
yeah.
were your initial thoughts from last week's meeting?
Oh my gosh. I mean, as a loan officer, it's so volatile right now. And, with that report that came out, the interest rate spiked on Friday. Like it went up and it's been like very volatile. Even this Monday morning, we had signal that, hey, it's going to be a little higher today as well, the rates. And it's calmed down a little bit, but we have big meeting this Wednesday. The Feds are meeting this Wednesday at 2 p.m. Eastern time. So
Mm.
it can be a good, it could be bad. So we'll see what they're feeling.
What
So
are they meeting on?
they're going over the minutes, right? So they have to meet and, they're going to discuss. And it's always like the press conference that gets them, like what they're, what they talk about, what they project is going to happen or whatever. So
Got it.
it should be pretty interesting to see what happens.
Yeah, I know a lot of news articles are kind of releasing like, oh, interest rates, they're high now, but they're going to go down by the end of the
Yeah.
year. And I'm just having a really hard time agreeing with that, just from everything I'm seeing, like with the economy still moving along, people still
I
spending
know.
money. I feel like they keep just talking about it, kicking the can down the road, like later, later, later.
Yeah, and it's been like that since May. We all thought that as
Right.
lenders, we thought that it's supposed to be going down. The rate's supposed to be going down, but again, there's a lot of things that happen that we couldn't really predict, right? But again, there's still a lot of reports, a lot of articles stating, hey, the rates might go down by the end of fall, right? But again, I'm just like you too. At this point, it's kind of like, hey, I don't know. It
Right.
might happen, might not.
This is almost like our new norm for the
Yeah,
foreseeable future.
yeah,
So for the people who are going to have to move, right?
hmm
They have to upsize or downsize or whatever it might be, they're relocating.
yeah,
We've talked about rate buy downs at
mhm,
length at this
yeah,
point. So I want to talk about maybe some other options like interest only loans
yeah.
or 5/1 arms or, what are those types of products that people might want to research to see if it's right for them?
Yeah, that's a good one, Tiana. So what I would tell you, I'll give you an example, a live example right now. I have a client, they're under contract, for a pretty substantial purchase price. They're doing 20% down. They're like, Tyler, the payment's still high. We try to look into the interest only option. So we end up giving them a quote for the interest only option. It's a 30-year interest only. How it works is, the first 10 years is interest only. And then after the 10 years, if they're still in the loan, it goes to a 30-year fix. But with that said, after calculating the numbers, the client ended up saving close to $500 a month going
Wow.
interest only. So for their situation, since they're buying a higher purchase price, is over the jumbo limit, right? Conform over the conforming limits, so it's a jumbo financing. It just made more sense for them to do it.
Got it. When would it make sense for, like the average person to do interest only?
I think it's going to be down. It comes down to the wire with the monthly payment. If they
Okay.
want to be more, comfortable at a certain amount, then the interest only might be an option. Even for investors too. We have some investors that rather have the interest only just because they're worried about their cap rate now.
Right, exactly. Got it. Okay. So that might be another option. And then they could refinance down the road, when rates
100%.
change and
Yeah.
obviously get a different rate.
Yeah.
But in the meantime, the interest only allows them to have that lower monthly payment, right?
100%. And I would say like the ARM product is great too. It's just that at this moment we haven't seen a lot of options for it. But if there is option that comes up, I would say definitely take it because again, I think I would have to agree that this interest rate right now, the way we have it, it should go down. What goes up must go down. And I mean, projection of hopefully the next couple of years, it should go down.
Yeah, absolutely. Got it. All right, guys. Well, that is the update for today. CPI, like we talked about, is still higher than the Fed is looking for. So they're going to continue to try and deter people from spending their money by keeping rates high. So this is what we're seeing for the foreseeable future. If you have any questions on the real estate market or on mortgages, feel free to reach out to Tyler or